help me welcome Stella Han, everybody.
Thank you, Amy. Wow, wow, wow. Can you guys believe it? We are at one of the last sessions of RPM. Hasn't this been the most empowering weekend ever? Let's give it up to Amy and Sean. So I want all of us at the end of this session to be able to walk away with the ability to really maximize the capital in your network. And before we get into that, I want to share a story of my first capital raising experience. So I've been buying real estate out in Atlanta, started out with just the basics, buying single family homes, long-term rentals. I was doing really well. I kept buying, and then I wanted to go bigger. I wanted to scale. And all of a sudden, I'm looking at a larger multifamily where the numbers just really impressed me. And then I look at my bank account, and oh boy, it's looking pretty close to zero. So naturally, I'm thinking, well, this is time to raise capital. We need OPM. We need other people's money. And unfortunately, I talked to everyone in my network, and nobody's got $100K, $200K, $500,000 to invest with me. But, my friends, my family, people in my network, people in the community, everyone had 10K, 20K, 25K, 50K. And collectively, when we pooled all of that money together, it was just easily millions of dollars where I could have definitely acquired that multifamily property. But then here's the million-dollar question. How do you actually pool that money together? Starting a syndication or a fund, it wouldn't work because these are just everyday investors. They're unaccredited, and a syndication or a fund, they can only take the ultra-wealthy, the accredited investors. So that wasn't an option. So I was pretty much stuck. What can I do? I'm going to leave this cliffhanger just a little bit longer because I want all of us to just double-click on this thought a little bit more. Everyone take out your notebooks, and I want you to write down the answer to this question. How many unaccredited investors do you have in your network? So these are just everyday investors. How many do you have in your network? Write it down. And the next question, what's their average check size? So how much money do you think an average investor, an everyday investor in your network can give you? Is it 10K? Is it 25K? Is it 50K? Is it even more? Write down that number. And then now I want you to multiply those two numbers together. Multiply those two numbers because that is all of your untapped capital base just coming from the everyday investor in your network. This is so much opportunity just lying around in your network that you're unable to unlock. So raise your hand if that is money that you would like to get access to. Yeah? Okay. And then I want you to put your hand down if you don't want to get into SEC jail for taking that money illegally. All right, no one's hands should be up, okay? Proud of you for no hands. No one wants to go to jail, right? So this is exactly what Fractional is here for, is we help you unlock your unaccredited investors network legally through our investment club model. So what is an investment club? An investment club is a group of investors who pool their money together for a shared strategy where the members actively participate. And that's the most important part, okay? Actively participate. Because that makes this whole structure not a security. And because it's not a security, that's how you're able to legally take money from unaccredited investors without even having to deal with the SEC because why? It's not a security. And we actually brought in the former senior counsel of the SEC to our fractional team and designed this whole model together on the platform. And that's exactly why our good friend Pace Morby is running investment clubs on Fractional. One, the majority of Pace's network are just regular, everyday investors, right? And that is easily hundreds of millions of dollars in deployable capital. And every single one of those people, they want to learn and earn with him. They want to sit at the table. They want to partner with him on deals. And then the third part is the scalability of investment clubs. It really makes raising capital so much more effective. And what do I exactly mean by that? Let's look at the traditional fundraising methods. So traditionally, you would likely start a syndication or a fund. And as we talked about earlier, that is for accredited and sophisticated investors only. So goodbye to everyday investors, right? Like that structure just doesn't even work. And then, usually with a syndication, you're getting a deal under contract, and then you have, let's say, a month to come up with all of the money, or you lose your EMD and you lose the whole deal. And to make matters even worse, guess how much time it takes to start a syndication or a fund? Yes, a lot. You're easily spending months with a lawyer, going back and forth on the setup, on the paperwork, and that doesn't help, right? Because you're trying to raise the capital, but you don't even have the syndication or this fund set up. So that is just all, distracting you from actually working on the deal, actually bringing in your investors, actually raising the capital. And that just really, really sucks. And in the off chance that, you do succeed, well, guess what? Next time the deal comes around, you're starting from zero all over again. You're in this vicious cycle over and over and over again, and it just does not scale, right? And now let's look at the investment club structure. It's open to everyone, unaccredited, accredited, whoever wants to work with you, you're able to take them in through an investment club structure. And then this is where it gets really interesting. So with an investment club, you define your investment criteria first. So this could be, what your buy box is. I'm buying RV parks with a certain return profile in a specific market. It could be I'm doing fix and flips with this purchase price and this target ARV. Private money lending, multifamily, whatever it is that you're working on, this is your investment criteria. And then you pitch your investment criteria to your potential investors, and you show them all the past deals that you've done before, and you use that as your track record and as the case studies to really show that you can do this. This is realistic, you've done it a million times, and you want them to pool this money together just for this criteria. So you're essentially pre-raising the capital, and you can raise millions of dollars from your investors who just want to do this strategy with you. And why would they do that? Because they understand that good deals don't wait for anyone, right? They also want to align with you to make sure that everyone has the capital ready so that when the home run deals come, you just get to deploy that capital you already have. So now your only job is to find the deals that fit your investment criteria, you bring it back to the investors, they vote on it. This is the active participation part. They approve that 123 Main Street is, in fact, a fix and flip that hits purchase price and ARV, and then you're good to go. You're good to deploy that capital you already have. Now, this is speed, this is scalability. And that's exactly what Pace did. He raised over $1 million from 50 investors with a minimum check size of just $10,000, and he was able to pull all of this together just within a 30-minute Zoom session. And then now with all the $1 million in the club, he is consistently finding deals that fit the club strategy, brings it back to the members, they vote, and they deployed all $1 million just within a couple of days. People are here to act fast because they want to move quickly with you. They don't want their capital just sitting around, so they are going to actively participate. And you know what makes it even better for Pace? He was able to make money from creative equity in the deal structure. You can do this through a profit-sharing agreement. You can do it through sweat equity. And he basically made money from the investment club without putting his money in. So there is room to be super creative in how you're structuring your clubs with your investors. And you guys might be thinking, well, it's Pace, right? He can do anything. That is not true. We've had superstar operators, just like everyone here in the room, raise millions of dollars from people in their network, people in the community, for all sorts of different projects. Co-living, student housing, multifamily, even businesses like laundromats and candy stores. So it's really whatever your dream and vision is, and involving the community and giving them the opportunity to learn and earn with you. And if you're someone who maybe doesn't have a ton of deal flow, or you're not super comfortable with the investment club strategy where you're raising money based off of a criteria before a deal, and you're someone that would prefer to still fund the deal first and then raise money for it, that is still totally possible. You can use a joint venture structure on the Fractional platform as well. And a joint venture is also not a security as long as you give your investors the option to have active participation. So here's a few ways that your investors can actively participate. First one is underwriting and deal review. Hopefully all of your investors are underwriting, right? They're checking the numbers before they hand you a check. So that's already one, box checked, right? Asset management is another great one. You can have them look at the P&L, the books, whenever those are ready. The third one, marketing and social media. This one is super genius for anyone that is doing any sort of project that is experience-based. So think short-term rentals, boutique hotels, right? You would want all of your investors to share Instagram pictures of your Airbnb, write Google reviews, right? That is literally free marketing, and everyone wants you to succeed, wants to do marketing for you because why? They're also a partner. They're also an investor in the deal. So that's another really great way for active participation. You can do recurring meetings as well, quarterly check-ins, updates. And then lastly, investors, they have strategic voting on key decisions. So things like a sale, a refinance. So lots of really easy ways where you can get your investors to still be active with you, but that doesn't mean they're going in there, lifting hammers, fixing toilets, nothing like that, right? Just easy ways for them to have a seat at the table, be able to participate, and that's how you make sure everything is not a security. And maybe in your head you're thinking, ooh, there's a lot of moving parts, this sounds kind of complex. Well, this is really where Fractional comes in, is we created the infrastructure that makes all of this possible. So first of all, we handle all of the setup and compliance. You can literally start your investment club or joint venture on the platform, start raising money just in minutes instead of having to deal with a lawyer for months. And then once your project is live, you're sharing your link with investors, you're talking about the deal, they get to submit their funds directly through your project link. And guess what? We don't believe in soft commitments. When people join your project, they have to put a 3% non-refundable deposit, almost like an EMD, right? Because when people say, I'm interested, they can verbally say anything, and then 2 days at closing, half your investors are gone. That flaking happens all the time, and it just sucks for everyone, which is why we've taken the EMD concept into the platform as well. So if people back out of your deal, they're gonna lose their 3%, and no one wants that. So when they commit, when they join, they are dead serious, they are committed. That means they wanna do the deal with you. And once you've hit your target, we have our legal team come in, we create the LLC, we create the operating agreement, everyone sends in their final funds, and then now you've got your club, you've got your joint venture, all the money to then do the deal. Then you bring in the deals, you pitch them, all the voting is happening on the platform as well. You're not coordinating a 50-person group chat or anything like that. It's all in platform. Investors are pretty much taking action just within hours of your vote going out. And even better, we handle everything back office. So every month, every quarter, whenever you have profit distributions, you're not going to be sending 50 checks, ACHs, wires. We automatically calculate how much each of your investors should get based off of their ownership, and we automatically send it to their bank account that they have connected on the platform. And then when tax year comes around, we're doing the tax filings for your investors. We're creating the K-1s for your investors. So that also saves you from needing to hire a CPA. Everything is one-stop shop on the Fractional platform. We want to make all of this possible in the same environment so you all can focus on actually raising the capital, finding the best deals, and collaborating with your investors. Let us do everything complex that is going over everyone's heads. Let us take care of everything behind the scenes. We started this business 4.5 years ago, and we've been so incredibly lucky to have helped operators raise over $400 million in capital. And for the company, we've raised over $20 million in venture funding. Fifth Wall, they're the largest VC in real estate. They led our Series A not too long ago. And we actually have Will Smith and Kevin Durant who have backed our company as well, which is always very fun to talk about. And this is just the beginning. We are just starting. I would love to connect with everyone. Make all of your dreams come true, whatever your vision board is. Let's help you really scale up your capital raising process, this is my blank. I would love to jump on a one-on-one call with my team and you. Everyone's deals is different. We want to help you figure out whether an investment club is better, whether a joint venture is better, even help you with stuff like marketing and compliance and all that. So book a call, and here's to the power of Medi. Thank you.